It is 1:15 in New York. We're coming into the end of the daily doldrums, and it is the first day back from a holiday. So we do have to make note here that the markets do have a tendency of being a little bit slower and having less participation. But we have a pretty historic moment here because we have a VIX that has defended a line in the sand from its old contract lows to highs. And the reason that is important, and where it becomes maybe more than important, but from the perspective of the series of shorts that we've been in, confirming, is that we were anticipating last week that the indices would continue to rally until the VIX ran into at least its 1915s, and then broke a short. And that's what would confirm the indices downtrend. And this is such a great example here of this reoccurring pattern that we have in history. In that when we're going up, we have this tendency of having, one traditional, and we go straight up in extensions. And this is one of the most aggressive rallies that we've had, really. I mean, I guess when you're looking at it from the perspective of last year, it really doesn't look that much different. When you're looking at these two just absolute rips. What is interesting here, though, is that, the run-in with our previous highs. And, I'd like to point out here, what I'd like to compare this to is it's actually May of last year, interestingly. We were inside of going into the beginning of the summertime, and you'll notice right here on May 29th, what had we done? We had run back up into a previous high. It was the exact week that we have right now, the week of Memorial Day. And we had squeezed right back up into a previous high. And then we just kept on going. And this is where, the indices rise until the VIX runs into its 1915s. And we're gonna find out here which scenario this is. Does the VIX defend its longs here, the variations of them, and have us roll over into a kind of hedge in May and go away? Or does the VIX defend its series of short setups that's above us, and we just keep on sliding through these 70s? And the indices keep on grinding higher. Of course, in nominal terms, not in real terms, in nominal terms. But that's the question that we're answering here this week. And this is a great example here. Take a look at it. A little bit closer look when you're looking at last year. And I'm just going to point out a couple of prices here. When were the lows? First week of April. When were our lows? First week of April. How far did we rally? Until the end of May. How far did we rally? Into the end of May. Last year, we dipped into a previous high. We're dipping into a previous high. Last year, the VIX defended shorts, and we made new highs. Question mark. It's actually very rare that you get prices in time and price that are so similar. In fact, it really shouldn't exist at all. This is a very strange moment. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.